Hello and welcome to episode 85 of
Mo Money,
the Investing in Economics show for Millennials by a Millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, the host, MC Mo. It's Christmas time, and what better gift than a new episode of Mo Money? So let's get to the gift that keeps giving. Wall Street decided to ring in the holiday season by selling stocks. The S&P 500 fell 13.5% from December 3rd until December 21st. There are a multiple of reasons that could explain the fall in stocks, but if you ask President Trump, there was only one man who is responsible for the sell-off in stocks, a man Trump appointed who has now betrayed him. Jerome Powell, chairman of the Federal Reserve. This past Wednesday, the Federal Reserve hiked federal funds rate 25 basis points, or the less intimidating 0.25%. Chairman Powell gave a speech after the announcement and said that although the economy is still strong, they see some areas of concern and will be more hesitant to raise rates in 2019. With all these new rumors, or most likely truths, that Trump did not want to get out, that he wanted to fire Jerome Powell. So this week we are going to discuss what is the role of the Federal Reserve, what is their role in the stock market, and can a president fire the chairman or any of the members. The Federal Reserve is an independent government agency that was created in 1913 by the Federal Reserve Act. It was created in response to the Panic of 1907 to regulate the banks and prevent any further financial crisis. The Federal Reserve now has a simple mandate given to them by Congress. 1, to maximize employment. 2, to stabilize prices. And finally, to moderate long-term interest rates. The unemployment rate has been falling even lower under Trump than it had under President Obama, currently sitting at 3.7%. Inflation has remained at or below the 2% goal for the Federal Reserve during Trump's presidency. The last mandate is what is causing all the tension between Trump and Powell, moderating long-term interest rates. After the hike on Wednesday, the Federal Reserve currently has the rate set at 2.5%, which is below historical average, but in an area Powell says is market neutral, meaning it will not cause the economy to grow too fast or too slow. So it's like the Goldilocks of federal fund rates. So what is Trump's big problem? Why does he want Powell gone? Trump thinks Powell is being far too aggressive with the rate hikes. They've already hiked 4 times in 2018. Trump says that the rising of interest rates will make it more expensive for companies to borrow money, making it harder for companies to grow and putting pressure on the dollar. The increase, Trump says, is interfering with his trade war with China. Trump wants Powell to stand down on the rate hikes until the talks are finished and be more accommodative with monetary policy. At the same time, the Federal Reserve has begun reducing trillions of dollars that they had accrued on their balance sheet after the financial crisis. This means that the Fed is no longer reinvesting that money back in the market, meaning there is less liquidity or money in the market bidding on assets, which could partially explain the recent weakness in the stock market. So that's Trump's problem, but let's discuss the role of the Federal Reserve. Although it could be argued otherwise, the Federal Reserve has no role or no responsibility in the stock market. They are not supposed to react to 5% or even 10, 20% moves in the stock market. They do not care about the swings in the stock market, which can be irrational. The Federal Reserve makes interest rate decisions on economic data, not the moves of the stock market. They are data dependent, not swayed by the anger or outrage of any presidents or any politicians. They are tasked with ensuring the long-term stability of the financial markets, not the whims of politicians seeking re-elections or any of these short-termisms. The Fed has said in 2019 they are ready to reassess and reevaluate their forecasts and look at risks in the data, but they will not be pressured or swayed by anything else other than the numbers. So finally, the question you've all been waiting to have answered: can Trump fire Powell like he has been discussing doing? Allegedly. The truth is, there really is no precedent for removing the chair of the Federal Reserve, unless he has, of course, done something illegal. But even then, most likely it would not be the president's decision to remove him. The president appoints the chairman of the Federal Reserve, but after that, the Federal Reserve is under the watch of Congress, not the president. So if Trump tries to remove him, he would most likely need to get Congress's approval to do so. And with a large number of Democrats coming to power in Congress in 2019, it seems unlikely he'll be able to get that approval. Fed chairman is not a cabinet position that Trump can fire and replace on a whim. There is a bit of a job security from the temper tantrums. You like that? The Fed chair has so much influence in the economy and the financial markets. Although Trump can try and bluff Powell that he might remove him to scare him into getting in line with Trump's vision, at the end of the day, if Trump removed Powell from power, it would send a shockwave through the financial markets and the economy that he would not recover from. And you can take that to the bank and deposit it. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money, signing out. Merry Christmas.